Well, good afternoon. Mark Milam here, your mortgage professional, Friday, April the 3rd, with your weekly interest rate summary and market update. So, what a week it's been. It seems like every week in the mortgage industry feels like a month right now. Almost every day feels like a month, and a whole lot of information to unpack this week. So, first of all, the unemployment rate reported for March today at 4.4%. We're now coming up off of those 50-year lows for unemployment. I don't think there's a soul in the country that thinks we're staying at 4.4%. Some projections show us as high as 20 to 25%, but certainly we are headed for Great Depression era unemployment numbers. So we know that's coming. I think all of us know that's coming, and it's going to be a difficult April ahead of us. We got some more guidance on appraisals this week as the agencies and then individual investors seek to protect not only homeowners but appraisers from spreading this virus. So a greater instance now of exterior only appraisals, of desktop appraisals, and even appraisal waivers to try to help mitigate some of the close quarters between appraisers and homeowners. So look for greater instances of those results. That's good news. Video closings are now a thing in the state of Georgia, which is fantastic news, long overdue. These are not, to be clear, these are not electronic signature, DocuSign kind of closings. What we're seeing is attorneys delivering closing packages via FedEx or courier or UPS, whatever it might be, to homeowners, and the homeowners then get on a webcam interface with the closing attorney or notary, sign the documentation, identify themselves, of course, and then they return the ink-signed documents back to the attorney. So definitely preventing individuals from having to get out, especially when we have a shelter-in-place order, and also preventing people from having to be in close quarters with one another with the potential to spread the virus. So video closings are now a thing in the state of Georgia. Fantastic news there. We are seeing the vanishing of the jumbo market. So Wells Fargo announcing yesterday that they're pulling out of all correspondent lending, all third-party lending. So Wells Fargo not showing up on the rate sheets, and they were one of the last holdouts for jumbo for many lenders. So we've seen TIAA, they're still hanging in there. AIG's pricing is pretty much gone. Chase has pulled back some on their pricing. Redwood Trust, SG Capital, all of these folks have pretty much exited the jumbo market. And it's going to be that way for a while. Why is that? Why is pricing so good for FHA and for conforming conventional, but we're seeing jumbo fade away? Well, it's all related to this disaster relief bill, where individuals who are impacted by this crisis can put their mortgage loan into forbearance for a period of up to 6 months, and then they can actually re-up if they're still experiencing hardship for another 6 months. Well, Fannie Mae, Freddie Mac, Ginnie Mae, those entities are protected if a borrower tends to do this, but not so much for jumbo investors. So jumbo investors would be taking an extreme risk by placing even more loans into the system when this is a likely occurrence for at least a percentage of their loans. So that's why you're seeing jumbo loans back out. There's no sense taking on all of that risk when there's no protection whatsoever. So vanishing of the jumbo market will be interesting to see who sticks around and who doesn't, especially over the next 30 to 60 days. And then finally, we're seeing more stringent credit criteria for FHA. And this is just simply a concern on the part of lenders of, can the average FHA borrower withstand this downturn in the economy? Do they have the savings to withstand it? Do they have the equity in their home to stay in the home? Or are we going to see a greater instances of payment defaults there for FHA? So credit score requirements going to see going up for FHA loans and a little bit for VA loans as well. Be sure to consult with your lender if you're entertaining the idea of a government loan, because there could be some changing criteria there. So lots going on. It's been an interesting week. You're going to see on your rate sheet really aggressive pricing for conforming conventional, good pricing for government loans as well, but starting to see some deterioration with the other products. As always, if you have any questions whatsoever, please don't hesitate to reach out. Mark Milam, 404-395-1102. Have a good weekend.